What is the best program out there? Zero down, no PMI insurance, virtually no lending limits, allows you to borrow the most money that you can out of any other loan. That's a VA loan. Backed by the United States Department of Veteran Affairs, it is by far the best program available for our veterans and active military. So today we're going to talk about property eligibility, what makes one eligible for a VA loan, what you need to know in terms of 2023 guideline changes, and frequently asked questions. There is a lot of questions that exist out there on what's truth that sometimes I think that even lenders don't know and understand. So we're going to have a good time with this video today and have you more educated than you were before in the process of VA lending. And if you like this video, please put a thumbs up. Ring that bell for more videos like this and share it out. This really helps the algorithms of what I'm trying to do and getting the word out for my videos and for VA borrowers. All right, let's get started. So VA has some of the most flexible guidelines. They allow you to buy the most house for your money. So this means that your income dollars that you have going in can buy that small house if you desire, medium house, or large home. It's absolutely by far gives you the most flexibility when you purchase your home. The second thing is there are no credit score requirements. So technically, if you have under a 600 score, you have the opportunity to get a VA loan. Even if your score is down to 580, you can possibly get a VA loan. You may need some compensating factors or need to be manually underwritten. Compensating factors look something like this: having extra time on your job, longevity in your job, longevity in your primary residence. And then you might want to put a down payment down. Even though VA requires no down payment, has no PMI insurance, you can option to put down 3 or 5%, 2%, which gives that great compensating factor, a push up, especially if you have lower credit scores. And the other thing is if you have what's called residual income each month. VA loves that. So that's leftover money to pay your other bills called residual income. They really like that factor in calculating if you can borrow more than the norm. Another frequently asked question is a VA loan only for first-time home buyers? And the answer is no, absolutely not. You could be a repeat user of VA a second, third, fourth plus time. The other thing that you should know is you can use a second eligibility, depending on how much eligibility you have, and have 2 VA loans at the same time. If you're departing your first home VA, going to rent it out or sell it later, you can qualify for another VA loan with as little as 0% down, depending on your remaining eligibility. So to check with your remaining eligibility, you're going to want to contact your local lender and let them figure that out for you. You can also get what's called your certificate of eligibility in advance with the link that we're providing you below so that you can check your own eligibility or get with a local lender such as myself, a local broker, so that they can verify that you have your eligibility in place. And with second eligibility, they can tell you that if you buy over $144,000 up to X amount of dollars, depending on your debt ratio and your eligibility, you could have a second VA loan at the same time. But know that it has to be your primary residence. So even though you're exiting your current home and it'll stay VA, you'll need to make this next home your primary residence. Before I get into the 2023 lending requirements, there's something I want to mention. When you're searching for a VA lender, do not go into Google and type VA loan lenders. What happens is you find the top 2 or 3 in the nation that have spent the most money on marketing advertising dollars. So there's one, and then there's a second one and a third one. So these top 3 lenders that are top 3 in the search engines have paid so much money to be there, and they are for profit. These are not nonprofit entities. So that means that when you do your loan, you're going to have higher closing costs and higher fees than working with someone like a broker who doesn't pay to play, who doesn't have all of those advertising expenses to be in the search engines. So you think you're getting a deal, but you're going to be paying higher fees, higher interest rates. In addition, you might even have your insurance there or your banking there, and that's okay. At the same time, them or another one of those lenders are going to be charging you high fees and high rates because of all the advertising that they do. A second point to mention is going with a local lender is so useful because those real estate agents who are the listing agents accepting those offers, they look for a local lender that is working on the weekends, so that's attainable for your real estate agent to get in touch with. And if you have one of those national lenders that are on a different time zone as you, or you can't get them on a weekend, that is going to be problematic. And when there's 8 other offers, they most likely won't go with your lender and with your offer. And you think it's because that you offered VA. That's not necessarily the case. They don't like these national lenders because they're hard to get to when you need them the most. So working with a local broker lender is so wise for you. It'll keep your closing costs down, your interest rates in check, and they have the most versatile guidelines because they're not bound to these big bank strict lending guidelines that the government puts on them. It's called lender overlays. You won't have those strict guidelines, and you'll be able to get an approval where maybe a big conglomerate bank won't be able to do that for you. Now let's look at the 6 eligibility requirements. Who is eligible for a VA loan? Here's a list of them. You're a veteran who served 181 days during peacetime or active duty. You are currently on active duty and have served at least 90 continuous days. You are the unmarried spouse of a veteran who died in service from serving in a service-connected disability and you remain unmarried. You were discharged from the military due to hardship. You are a veteran who served 90 days during wartime. You served at least 6 years in the National Guard or Reserves. The government establishes who is eligible and what the requirements are. However, it's a lender that will give you the mortgage, so you cannot go to the government for your VA loan. You go to them to get your certificate of eligibility and to see what your eligibility requirements are. Again, we have the link provided for you below so that you can pull your certificate of eligibility, or I can also pull it for you. Now that we know that you're eligible, let's look at the benefits of a VA. A VA loan is 0 down payment. There are closing costs and prepaid items. Those can be paid by you or the sellers. A huge benefit is there's no monthly PMI insurance, and this could range from $80 to $300 a month. So this is a very large benefit. In addition, the property taxes and the insurance are included in your loan payment, giving you the convenience of having one easy monthly payment. And as I said, you will have closing costs and escrows needed for your taxes and insurance and some different prepaid items. Those can be paid by you, or you can get seller concessions so that you literally have 0 down. With that being said, does VA allow you to put a down payment down? Yes, and absolutely. And then also, a lot of times I get the follow-up question, am I better off going with conventional financing since I have down payment money? Well, the answer to that is very simple. It's really important that you do a side-by-side comparison with your lender, conventional and VA, to see what the benefits and the cost are of each one so you can see what's better for you. Putting 10%, 20% plus down, going VA versus not going VA, and putting that same down payment down and seeing what the payments look like, the interest rates. I will say VA often offers reduced interest rates. So oftentimes it's better to go VA even with a down payment, because then you just have an ultimately lower payment. What you can count on me doing is always issuing 2 letters with your VA approval, with a secondary letter, conventional or FHA, whatever you're better suited for, so that you have more than one option. When you work with a broker lender, they have the ability to give you double approvals, a conventional approval, an FHA approval, and also a VA approval. Maybe even a USDA rural development approval. That is so helpful. So when you work with me, I'm always making sure that I give that VA approval and a secondary approval whenever possible, because sometimes the house specifically will be better suited with a different type of financing. So let's talk about that a little bit more. Now I want to take a little bit of time and go through the cons or the negatives of doing a VA loan, because there's always pros and cons to each type of product. So it's only fair to give you the full picture. A VA loan is especially good for single-family residences. If you're buying a condo, it has to be on the approved condo list for VA. If it's not on the condo list, then that's where that second approval will be good for you, whether it's a conventional loan or an FHA loan, for example. Because if it's not on the VA approved list, then it will have to be spot approved, which takes extra time, and the sellers may not be willing to wait. They might go with another offer. Another thing that you should know is if you're not a disabled vet with a 10% disability or greater, you are subject to a guarantee fee that goes to the federal government to insure your loan against foreclosure. The first time that you use the your VA loan, you're charged 2.3 points. That's not something that you pay out of pocket. Remember, it's a 0% down loan, but it is something that's rolled into your loan. So for example, a $350,000 purchase at times 2.3% is $8,050, making your loan amount $358,050. So you'll want to have the ability and know that you'll want to stay in your home. I would definitely say greater than 3 years in that home to make sure that your value is increasing enough to overcome that $8,000 fee that's rolled into your loan. With that being said, there is no monthly PMI insurance, as we said before, so that is the offset to the no PMI insurance. And if you're using VA for the second, third, fourth time, you don't have a disability, then you're subject to that guarantee fee at a little bit higher rate as well. Another con is this must be your primary residence. You cannot buy using VA for an investment property or even a vacation home purchase. It has to be your primary residence. So you have to plan to live in it. It can become a rental after at least 1 year of you living there, but initially it does need to start at being your primary residence. With that being said, there are some other requirements for VA, so let's talk about a couple of those quickly. VA likes you to have at least a 2-year job history with continuous employment. Does it have to be at the same job? No, absolutely not. They do like it to be in the same line of work and without a lot of gaps, big gaps. If there's a gap at all, then they want you to explain what caused the gap and that we have a 2-year continuous history within the past. Remember to give me a thumbs up, like that video, and share it out to others that will like it. And remember, VA is extremely lenient on debt-to-income ratios, so VA will give you the most buying power for your money. You might have a conventional approval with a limit of $250,000 and not understand why you have a VA approval up to $350,000. It's because VA is so much more lenient. They have a lower interest rate, no PMI insurance, allowing you a little bit more buying power as well. So the last thing I'd like to say is that VA appraisers are VA certified, and they are the most gracious in giving valuations on homes. They want that veteran or active military in their home with their family, and so they give a lot of leniency on value. And there's also this thing called Tidewater, where an appraiser will seek out the real estate agents and ask them to provide comparables to justify the value or the sale price that the house is being sold for. So know that if you are getting a VA loan, the lenders absolutely want to lend to you, and we want to do it because you have done so much for us. Thank you for your service. It will be a pleasure to serve you.